What would happen to your trading if you stop trying to watch everything? Most traders think the way to make better gains with leverage ETFs is to watch more charts, more tickers. I believe the opposite. My best leverage ETF trades usually come from fewer decisions, fewer tickers, and a stronger weekly chart process. In this video, I'm going to walk you through my 3 trading habits for consistent leveraged ETF gains. And yes, I'm going to count them down from habit number 3 to habit number 1. But habit number 1 is the one with the biggest payoff. Habit number 3 is this: shrink the battlefield and sharpen your aim. If you're a busy professional trying to follow a whole stable of leveraged ETFs like this list, well, it's going to be really challenging. I remember one time I was mentoring a psychologist who was so worried about missing a move that she tried to watch a huge list of stocks. The list was so big, she ended up missing almost everything. When I suggested that she cut her list down to something more manageable, she said, "But then I might miss something." Hey, leave a comment on what you think I told her when she said that. The ideal way to do things is to move from a big list. I mean, this is a great list of leveraged ETFs that I do in fact follow, but I also have my go-to list, which is made up of leveraged ETFs that I know I can look at in 2 or 3 minutes per day and know right now, yes or no, is it time to trade them? So instead of trying to watch everything, I can focus on a small list of leveraged ETF that I understand and that I believe have enough movement potential to fit my system. Remember, a smaller list doesn't limit opportunity, it limits noise and distraction. Hey, remember, habit number 1 is where I'll show you how the weekly charts help me define a higher probability, rule-based entry and exit plan. Habit number 2 is what I call the daily and weekly pre-flight. It is a matter of going through my list of leveraged ETFs just to double check to see if there are any that are setting up. And it's a very easy yes, no answer. No, they're not setting up. I go on to do something else. Yes, they are setting up. Then I'll start to design my particular trade that we'll cover when we get to habit number 1. One of the things to remember about the pre-flight, I've already loaded my watch list with leverage ETF that have the potential, again, I emphasize the potential of generating a 50 to a 100% return every year. I know it's not a guarantee that I'll get that, but I know if they have a history of that kind of movement, that if I'm patient and have a clear and simple approach to getting in and out of the trade, that it will pay off over time. So when do I do my pre-flights? Well, I do them either during the final hour of the day or after hours. Then if there is a setup, I use my toolkit to place conditional orders that can execute without me needing to be in front of the computer. Hey, I live in Hawaii and I don't get up for the market open, but my orders do. So if you'd like to see a video where I break down my target shooting process, just comment target shooting in the comments. So before we jump into habit number 1, the one you've been waiting for, the processes I use with these 3 habits is exactly why I wrote my book, Trade Your Way to Freedom. Most traders do not need noise. They need a clear, simple process that tells them what to watch, when to prepare, where to enter, and where to exit. So if this kind of structure is what you've been missing, check the link in the description to get a copy of my book. Now let's get to habit number 1, because this is where The whole process comes together on the chart. Habit number one, and this is a big one, is let the weekly charts call the shot. This is where the process becomes simple, not easy, not guaranteed, but simple, because once I'm on the weekly chart, I'm looking at a high probability rule-based entry and exit plan. I'm not being confused by the noise that's happening over here on the intraday chart or the noise that's happening on the daily chart. I'm focusing my attention on the weekly chart. And this is where I've learned after 30 plus years of trading where the strongest moves come from. Let's take a closer look. Let's take a look at the 3 leverage ETFs identified earlier. What kind of potential do they have? Well, one of the things I want to point out to everybody is that I do this. I focus in on the TSI on the weekly chart, and my settings on the TSI is 883, and I also look at MACD histograms. What I've found over the years is that when the TSI is in the lower level and then crosses up, that is a great trigger to get into a trade. And then once it crosses down, that's a great place to get out. So I focus on the TSI, and I really like it when it is really extended to the downside like we see there. And also the MACD, we'll cover this in a future video. This is what I call my rising tide MACD histogram on the weekly chart. Once it starts to turn up, that's telling us that, the tide is changing, so I need to be ready to take action. I'll let you go ahead and go back in time and check other places, but let's just take these last 2. And I'm not cherry picking here because I've gone through and I've reviewed both TQQQ and the underlying going back to when the Qs first came out. And this tends to work consistently across the years. And that's what we're after for. A really quick way to be consistent that I don't have to watch every week. So here's the idea. While the TSI is sloping down and the MACD is also falling over, that means the tide's going out. I'm not interested in trading it. I'm interested in trading as soon as I get across on the weekly chart, across the TSI crossing back up, the MACD gives me a heads up saying, the tide may be coming back in. Get ready to trade. So how do we trade it? I'm glad you asked. This is for the entry. When the TSI actually have a crossover, which is there, that's my trigger to get in. I can either buy in at the end of this week, which I would have bought here, or if I miss that, I can buy close to the 10-week moving average, which is the equivalent to the 50-day moving average approximately. Where do I exit? Well, as I said, I exit after I cross, which in this case was right there, is when I crossed. And so if I'm at the end of the week on Friday, I could have exited there and just taken my profits off the table. Well, what kind of a run did we get in 2005 if we have done that? On TQQ, if I would have gotten in at the end of the week where I had to cross, and I got out at the close of the week up here, it would have been 51%. Does that meet my criteria? Yes, it does. Then in 2026, in April, I get across there on TQQQ, and if I bought at the end of that week right there, how much did I run? Well, all the way up until it crossed back down, another 56%. So there you go. Both of those worked out fine. If I would have got out there, it would have been about 47%. So it's really close. As we move into TSLL, the 2-time leverage ETF of Tesla, let me ask you a quick question. If you could trade in less time with more potential and greater consistency, how would that change your life? Just leave a comment. What we see with TSLL is basically a kind of a repeat of the traits that we saw on the TQQQ chart. We have a very similar type patterns, and we're looking for what? We're looking for those upside moves on the TSL. The downside of the chart of TSL we see over here back in 2024, we finally get a really nice bottom to look at. And what am I looking for? I'm looking for the cross ups in the TSI, which equates to a move here, which I could have entered in. And what was the potential move out? I tie that to the TSI crossing back down, which puts me out about there. So what is the potential upside on that? If I did get in about here, my potential upside is somewhere between 85 and 57%. Well within the guidelines that I've been looking for. Well within what I want to achieve on a yearly basis for any of these moves. Remember, 50 to 100%. What about the next move, which happened here, actually happened here, sold out. But then let's say we jump onto this trade right here as it crossed above the 50-day moving average. I have the trigger here, which puts me in about there. And then I can ride it all the way up until it triggers back down, which is there, corresponding with approximately that number right there. What does that turn out to be? The move bouncing off the 50-day moving average back to where it broke back down is somewhere between 157 and, let's say, 143% within a 10-week period. And the next one that I'll take a look at is, what about this one? As you can see, there's multiple opportunities across the years. And if I hit 2 or 3 of those on a yearly basis, and they're all 50% or more, isn't it well worth waiting for the TSI cross back up to the upside? Here's another one I'll look at. This one here, there it is, which corresponds with that. And then it crossed back down a little bit right in here. So let's say I got out there. And I have to choose between getting out at the end of the week, or if you'd like to see a video about how to better time these tops, just leave a note and I'll do a video on that. How much was that move? Let's say I got in at there. Well, that move there was only, if I get out when I cross back below the 50 or the 10-week moving average, that's the 50-day moving average, about 22%. What about some of these other moves later in 2025? There's a move up here. Grab that, pull up to here, and then it crossed back over there. I would have gotten out at least by the close of the week, which would be about a 50% gain. And what about this last move over here? If I take the move up to the upside, pull back to the midsection of the candlestick, and trigger it out over here, that's a quick 30%, or crossing the 50, somewhere between 30 and, worst case, 9%. So that would probably put me out with about a 20% gain. So as you can see, the waiting for the weekly TSI crossovers gives you some stability, but it's a game that requires your patience. Now, let's jump into the next entity, SOXL. And if you thought the first two were good, wait till you see that one. What about SOXL? I think I'm saving the best for last. SOXL shows similar type of processes, and I'll go back to that same time frame in April of 2025. I get my crossover there, and it then crosses back down about there, 85%. That's why I really like SOXL and TQQQ. They are the big movers. What about this move over here? I get my breakup, right off the 50, it runs up. There is my turnover, 238%. That's if I closed it at the end of the week. And again, I'm targeting either opening the position at the end of the week or closing the position at the end of the week. Now, you may be asking and saying, well, Dennis, wait a second, you may show this crossover earlier in the week. Well, the fact of the matter is if it's on Monday, Tuesday, or Wednesday, I ignore it because I don't have a valid signal. If it's Thursday and Friday, I'm getting closer to a valid signal. And no, I don't cheat. I wait until Friday to make sure that I have a signal that I can then act on. And I will act during the final hour of the day on Fridays so that the position is in place. So the 3 habits, habit number 3 is shrink the battlefield and focus your aim point. Habit number 2 is do your daily and weekly routine and be ready with your conditional orders. And then, of course, habit number 1 is have that 2-point entry and exit based on the TSI that we execute on Friday. If you want to see more videos about how I actually target shoot and plan my trades with target shooting, just respond, put a comment that says target shooting, and I'll build a video just for you. Hey, check out the next video because it's going to reveal what I'm doing in other arenas like SpaceX. Yeah. Oh, there it goes.